Real deal once again, and you know what? Groundhog Day isn't actually real. It's a fantastic movie. It doesn't mean, however, that you can't look to rinse and repeat every single day as a trader. What is the most simple and basic trading strategy that you can look for one day to repeat itself? If you get the same thing 2 days in a row, I mean, it speaks to an opportunity for you to take advantage of it. And I'm going to give you 3 ideas here, 3 different ideas on how this can play out for you. Sometimes it seems obvious, but the simple trades are often the best. The boring trades are often the best. And that's what you want to look for as a trader. What is repeatable, especially if you're a beginning trader? So first up, I got Sofi here. So look at, I'm giving you 4 days, and I'm not including today, but I am showing the last 4 days. Ooh, look what this did 2 days in a row. Same top, 830, same bottom, 775. Okay, well that's curious. When it fails that bottom, 830, look at that top now. Sorry, when it fails that bottom, 775, look at that top in the early, late morning into the afternoon. You go 775, now down into 750. So now you have double bottom, double top, and then lower high, same top, 775, 750. Now, if you were going to trade the next day, the first thing I'm going to think about is, okay, well, would it actually just hold the same support level? Is 750 going to hold? Or is 775 going to be the level I'm trading off of? It's that simple. It's like really, it's not rocket science. In this particular case, well, it didn't matter a heck of a lot which one you chose. Because at the open, it immediately fails the top. That's one wick right at 930 and right back underneath the previous resistance level. Goes right down into 750, and there is your bottom. Now, if you're going to make some kind of a style trade here where you're looking for a bottom top, maybe you'd hold this to the high. I think it's generally downward trending because the last time it did it, whoops, I'll zoom back out here. The last time it made that move, it double topped, went all the way back in and was trending in. So it's trending to the downside, which is why I'm not going to hold it till the high of the day there. I think I'm going lower high because the trend is overall down. But that's 3 days in a row it holds the same bottom. You could trade this, like I said, in either direction. You could have shorted the double top. You could have shorted that 775 failed breakout at the high of the day. It doesn't really matter. All you know is you've got a stock which is showing you a pattern and you want to take advantage of it. And the other thing that's great about this is they have earnings on Monday. So you might have people that are waiting around and not putting big positions on and not going crazy until the numbers are dropped. So you have like this compressing level of volatility, which is giving you an opportunity as well. I said I'd give you 3, right? So 1, 2, 3, got to get to 2 first of all. And I'm going to say, that, look, if anyone's watching the payment processors has already known this if you watched the morning show today. Yesterday on Square, and I'm going to give you a 15-minute chart first because this level is even better than just what you're seeing on the 3-minute chart. When you pop out the 15-minute chart on Square, look at the wick bottom, right back there a week ago, make another high, and then right back into this wick bottom. Yeah, does that look any good? That looks pretty good. You get another bottom there yesterday, so that's 3 times you bounced off 62, and then a 4th time today. Okay, so you got to ask yourself a question. Could you possibly like the support at 62 anymore? You'd think the answer is no, but the answer is an absurd yes. Because the second part of looking for this pattern is, what if you can add even more confluence to a big level hitting the next day? Well, in this case, you could. And you almost should have. Why? Because PayPal, an adjacent stock, had an event yesterday and tanked. Now, this is right at midday when it absolutely flushed through those lows. PayPal was strong. PayPal got destroyed for $4 to the downside afternoon. The event started at 12:30. That is a tremendous amount of down pressure. Can you get information from downward pressure? I'd like to think that you can, because Square held 62, 12:30 hits, Square holds 62 again. So if you didn't already like a level just because it was a line on a chart, now you've got a massive event causing pressure in that space, showing you that there's still buyers in this other name at that specific price. So then you look for if you have a chance to get it off the long, it ends up working out off that 62 level. So the second part of it is if you see a pattern forming and you get confluence for it, like the example with PayPal, it's much better than the Sofi trade because Sofi wasn't in play in particular, and that's why you get more out of the square move because there was more significance to that 62 level. I can't stress this enough. You've got to be able to learn the lessons from the day before because before I move on to the next idea, I have to remind anybody that wasn't watching this live. On day 2 at 62, I was long this yesterday on Square. You know, I had this trade and I made the wick bottom. Like I was long twice in this bottom and got stopped out twice. So it's not just about finding the key level, it's adjusting your execution strategy. So the way that I went into this trying to avoid that was understanding if the first part of the move is around 62 to 63, and I think that that can be a general move where you can then hold some past $1, and a scalp trade is 50 cents, well, what I needed to be able to do is not have a hard stop at 62 even. So in that particular case, I'm going to give it a little bit more room, long right in front of 62, but I'm not stopping it out at 99 or 95. In that particular case, because the more I like the level, I'm giving it to 70 or 75, maybe even a little bit more. But how can you have the confidence to do that when it's also a flat bottom break? All of that comes from what happened in PayPal the day before. Liquidity vacuums and massive events sometimes reveal and tip the hands of big buyers. Think of a Fed day. How many times have you seen the Fed make a decision on interest rates, the market spikes up and down, stocks show you a big level, then the next day that level holds? That's what's important, because when algos stop making a bid and an ask, you got to look to where they're comfortable buying or selling again. And in this case, that's where the 62 came in. So confidence to get it, but then confidence to also give it a little bit more room, add on the way back in, and then try to hold on to a piece. All right, I said I'd promise you 3. The next one and the last one is, what do you do about, let's just say, earnings? Now, we all know earnings are a volatile trade. And I'm not going to sit here and tell you that I had this trade on Intel, but I look back and it's like, why didn't I have this trade? We talked about it in the morning show, didn't put it on. When you look for history repeating itself, sometimes it's not going to be in the open market. Now, I just finished talking about liquidity events, right? So when PayPal had their live event, market hours were open, you saw it tank, other stocks caught bids, like Square did at 62. Well, in the aftermarket, when there's earnings, there's volatility. And you see here with Intel, Intel went from 50 bucks to 43 in the aftermarket. They beat on the top and the bottom line, but their guidance wasn't up to par, and they got absolutely destroyed. You can see that here. The bid came in at 43. Okay, so that's important. The bid came in at 43 and it bounced back. Great, it still gapped to the downside the next day. So what do you do about that 43? Well, the first thing you should always do is, when in doubt, zoom out. Is there anything that will make me like 43 a little bit more? And this is where it gets tricky, because you've already determined you've made a wick bottom at 43. You've got to avoid confirmation bias here and try to make sure it's something consistent. In this particular case, I'd been observing this channel for the entire year on Intel. Higher highs, higher lows that it recently broke out. Now, it broke out of the channel, so it's kind of come and gone, but look what happened when it retested the top of that channel. I want to see how it behaves. It bounced off the top of that channel and went to a fresh high. So once I see that, I'm like, oh, I'm leaving that line in there, leaving my trend line in. What happens if it bounces off again? I wasn't thinking about earnings. I was just thinking about how good that trend line was. So once I have that in and I see it bounce off 43, which is the same trend line, there it is again in the aftermarket. Well, where do you think you bounced at the open? Like I said, I didn't have this trade on. I was trying to fade Intel on a pop instead of go long off that 43 level. But look what ends up working. It's pretty clean. You've got to be able to look to the history. It's not just about finding, it's great finding indicators that you love. Those should be in your toolbox. But I think the most simplistic thing you can do before you start your trading day is look at what happened yesterday on the stock, or maybe the 2 days before, and what can I do with that? What can I learn from that? What can I glean from that? So first, you've got a simple repeating pattern like Sofi, where it literally mirrored 2 days in a row, then mirrored them again, and then gave you a trade in the 5th day. That's easy. Two, then you get another one. Square, which not only gave you the same bottom, significant bottom 2 days in a row, it then gave you confluence in the way that that bottom held because of news on PayPal. And then in the third instance, you've got something on earnings here, which you get a massive supply zone showing up in the aftermarket on a stock that tanked, lining up with a major trend line on the daily, which gives you the reason to go long when it dips in at the open. So there's 3 ideas, and all you got to do is look at what happened the day before. You saw how it worked out for Bill Murray. The guy basically became like a god in Groundhog Day. That's not going to happen to you in trading, but it's not a bad way to start your day. What happened yesterday, and how can I use it for my trades today? That's the real deal.